Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. The gold market, guys, we just should say that our recent worries on the possible, the fragile of the upside action was really not illusory. So you could see that market, we already have announced our warnings on the recent action when we have seen the first grabber right here yesterday. So that was the first grabber that has appeared. Okay. And we said that something is wrong. At least this is the complicated factor that makes the overall situation complex and really makes difficult for the market, adds more difficulty to continue with the upside action. This is the cloud on the horizon of the upside action. And we said that as this pattern has been formed, to erase this pattern, market should move above this top. And only in this case we will be really sure that upside action stands valid and that we still can count on this action. But what has happened yesterday? You can see that market not even has erased the previous grabber, but it has formed another one. So we can see that recent action has given us another grabber to the downside. That's another bearish grabber. And that already is something. That's not just the occasional pattern. It seems that this is some sort of the tendency. That's why, guys, we have called you yesterday to protect your profit, to tight your stops, to take the half of the profit from your position, because this action really looks fragile. And we knew this also earlier, because we a million of times already have said about the lack of the fundamental support, lack of the real purchases on the spot market on the gold, that the fundamentals points on the opposite action, that they are not confirmed the upward direction, but still we weren't able to take short position because we do not have any reasons for that. When the market forms the reverse head and shoulders pattern, you can't take just short position because you would like to do this. You need some confirmation of this. You need to see some flaws in the upside pattern or in the bullish scenario. And right now, these flaws have appeared. And they are bearish grabbers that have been formed in the two recent sessions. These grabbers suggest taking out of these lows. But from the market mechanic point of view, the returning right back to these lows will mean the failure of the head and shoulders. In general, guys, you should understand that this last swing of the reverse head and shoulders pattern is the area, is the time when the bulls should totally control and totally rule over the market. They should dominate on the market, and you need to see here the price action similar to this one, but in opposite direction. This is the time when the bulls taking their strength show their strength, and the market should accelerate further, but we do not see this. Okay. On the intraday charts, on the hourly chart, for example, we see another another signs of the weakness. Because take a look what has happened recently. When we have seen this thrusting action to the upside, we say very good. We see the signs that bulls have activated and started to move up. Here, say BCD pattern has been confirmed and completed, and we could count on some retracement right back down to retesting of this former bottom, former top. But what have said in reality, what has happened in reality, you could see that market hasn't stopped with this just ABCD, although there was some support here, you could see some sort of consolidation, but it has plunged even lower with this strong sell-off that has happened yesterday. And this action mostly has erased this recent upside action. Okay, so you can see that this low is greater than this one. I mean, lower than this one. In fact, the recent action destroyed this upside action. That's the sign of the weakness. From the pivot points point of view, you can see that market has reached the weekly pivot resistance one, returned it back down. It has closed below the weekly pivot point. It means that the pivot resistance one has holds upside action, holds upside retracement. And this in turn means that this action to the upside is just a retracement on the bear trend. That makes me think that we right now should close any long position if you have any, and you haven't closed them by the tighter stop orders that we call you to place yesterday. Okay. And I think that we should start to think about the taking the short position, because you can see the market hasn't stopped here. It almost has returned back down to our initial entry point right at this top. Okay. And that is not really good sign for the bulls. Again, with the accompanied with the lack of the support on from the fundamentals from the spot market, currently it seems that might become the starting of the new significant downward action on the gold market. Right here, this could be the starting point of the road to the bottom of the head pattern. So right back to the lows of the 2014. It's approximately 1130 area. That really could be the break-even point. So that's why, guys, do not take any long position right now. Maybe even start to think about the taking short. This absolutely from the market mechanics. The point, the reason even not with the grabbers by itself, by themselves, but the point is the action with the action that from the market mechanics point of view is not normal, is not typical for the development of the reverse hand shoulders pattern. And the breaking in the market mechanics, in fact, is the more important factor, more important feature than just existence of the bearish patterns. The breaking on the market mechanics means that the overall setup is not working right now, and it probably will fail. And if it will fail, the road, as I said, right to the bottom of the head. When the head and shoulders pattern fails, and the right shoulder, the next target is the bottom of the head. And the grabbers just could become the triggering patterns. This could become the visual confirmation of this breaking in the market mechanics on the gold market. That's why we think that we should not take any long position, close that way. If you have something, if you have any short long positions that we have taken a couple of days ago, and start to think and be prepared for taking the short position. Maybe you could even already start to think with it. If market will show some reasonable retracement right back up, you could stick with the grabbers that we have. These two invalidation point of the grabbers. You could use the reaction and the fib levels from this swing. That is the most recent grabber, or from that swing. That is the first grabber that we have. They stand side by side, so it's a significant choice. Really, a lot of choice among the levels where you could try to take position. But that will be our invalidation point for the possible bearish scenario. So if market will return it back up, taking out of this top, in this case we could say that grabbers have failed, and we need to see for further clarification of the situation in the gold market. But right now we should not take any long position and start to search chances for taking short.